Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms such as our SPY and ES mean reversion systems with about 90% winning trades, and our amazing KISS systems, which have been live for about a year and a half. We're going to launch a new version of that very soon. Looking very forward to that. Anyway, it's been about almost a week since I did a video on YouTube. Since that time, of course, we've had several newsletters here on Breakpoint Trades that Steve Nelson has done. I hope everyone had a nice Memorial weekend, by the way. Anyway, let's go ahead and get started. This is a technical analysis review of the market and our trading systems, and it's currently May 30th. This is our back-end recorder for our standard website subscription webpage format, and I'm going to go ahead and get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Thursday, May 30th newsletter. It's been almost a week since I talked to you guys. As you know, we had the Memorial weekend, and since that time, Steve has done all the newsletters from the weekend newsletter, and as well as Tuesday and Wednesday. So finally, I get a chance to do a newsletter here. Again, hope everyone's had a nice week and had a good Memorial week. Anyway, this newsletter, I'm going to try to get through this as quick as I can. My daughter has a double header tonight in softball. She's actually at her first game, so I'm trying to get this done so I can get to at least the second game. Anyway, this newsletter is divided into 5 major sections. Obviously, my opening statement. I'm going to make a couple comments on our mean reversion systems. We had a couple trades here, some confusion, so I'm going to clear that up briefly. I'm not going to spend a lot of time on it. And also talk about our KISS systems. Finally, I think we're about ready to launch that new version of the KISS systems. We're hoping to launch it either this weekend or next week. Okay, so I'll be talking about that. We'll also talk about the general market indexes. We'll look at some of our custom indicators, review a few sectors, just a handful of them. Don't have time to review all of them. We'll look at US dollar, Bitcoin, crypto stocks, precious metals, commodities, and we'll review a few recent trade setups. I added a couple new ones, but not too many. I'm just going to mainly review recent ideas. As far as the market, guys, we've had a nice pullback correction from the highs just over a week ago. If you recall, last week and on the weekend, we gave our technical opinion that the market, we were looking for about a 150 to 200 point pullback on the S&P 500 and as much as 1,000 points on the NASDAQ 100 NQ futures. And so far, we've had a nice pullback. The S&P is down about 120 points off the highs. I still think it's got a little more to go. But basically, we were cautious in the market a week and a half ago, and that caution has played out. All right. And anyway, sorry about that. I lost my train of thought there. But anyway, so that's played out nicely. And as far as the market, as you know, we had that very narrow range market breadth early in the week and late last week. You know, you can't have NVIDIA holding up the entire market, guys, right? So when you have situations like that, you know, it's kind of, you know, you're due for some sort of pullback. Here's and I probably shouldn't even show this, kind of a politically incorrect image, but I'm not sure who made this. This is an image someone made of when they talked about Apple holding up the entire stock market. Well, I guess Apple got tired of holding up the person, so NVIDIA is now took its place. So anyway, again, totally politically incorrect, but whatever. Anyway, so nice pullback in the market. For now, we view this pullback still as some sort of wave 4. So whether we go a little bit deeper here, say 150 to 200 points on the S&P off the highs, we're still viewing this as some sort of wave 4 pullback with yet one more move to a new high in a wave 5. All right, on Friday morning, we have PCE and PCE core inflation data. So let's see if that can move the market or provide some sort of bounce since we are a little short-term oversold. And let's get started here with the charts. So first chart below, this large chart here, this shows you our SPY and ES mean reversion systems. Okay, these are all the systems that look for long trades on the SPY ETF. All right. Anyway, today the trend pullback triggered a first entry long, which I sent out to our subscribers. Yesterday, a couple of these other systems had indicated a trade entry, and that ended up being an error of TradeStation, which I already communicated to subscribers. Kind of sucks, but it is what it is. Otherwise, the actual official trade that we have open live is the trend pullback a first entry. And the mean reversion systems on the ES, so far they have not taken any trades. So it's just one of the 21 mean reversion systems are long on SPY, and it's the trend pullback. Again, should we go lower? This may require, say, a second entry, sometimes a third. That's how these systems are. They scale into pullback. Sometimes they require 2 or 3 entries, but overall they have about 80 to 90% winning trades. Next. So let's talk about the KISS systems here, guys. So the KISS systems, we've had these live on the website for almost a year and a half, basically since last January, last year. Okay, they've been pretty phenomenal. The KISS system is basically a universal type of long-only system. It's profitable on most instruments, not everything, but most things. It's profitable without any back testing. That's the beauty of it. The universal type system. It's long only, it takes an entry, it gives you an initial stop, so you have your risk defined. Then it moves that stop up over time to protect those profits. And it's done very well. So for example, here's some of the live systems. Wingstop, it's up currently 134.6%. It's been long since September 11th, 2023, and it's raised its stop an amazing 32 times. But you can see these others, and NVIDIA is also long nicely. But this is an example of how these systems are. And hopefully many of you have been following these who are subscribers. If you are not following these, I don't know what's wrong, because guys, you are missing a valuable resource. The website, all you got to do is set favorites. It'll automatically send you trade notifications to your favorites to alert you whenever your favorites go long, where the new stops are, and when to exit. It's 100% mechanical. So it's an amazing resource. We have the KISS systems running on about 750 stocks and ETFs. There is nothing out there like it. Let's look at the next image. So image number 4. So likely this weekend or early next week, we're finally ready to launch the subscription version of this KISS systems. So that subscription version is going to come with everything. And it's also going to be coming with the premium section, which is the KISS system, but on a lot of smaller time frames. You can see some examples here. Tesla, 130-minute, UPRO, a 30-minute, a 78-minute, SLV, 130-minute, 65 minutes, 78-minute. And so these intraday systems can trigger, these smaller time frames can trigger intraday. And we're including SMS text messaging, so you can get an alert on your phone. And these higher performance KISS systems can have anywhere from 2 to 3 times the performance of buy and hold, with, of course, 1/5 to 1/10 of the drawdown. Again, we're going to be launching this either on the weekend or early next week. It's going to be a subscription. And the subscription isn't for the premium guys. That just comes with it, the high performance. The premium is going to be for the whole thing, right? So I'll have a free section on the KISS systems. It's going to be the BPT basket. But in order to set favorites, get email alerts, get SMS text messages, get the weekly, you'll need to subscribe. But again, any of you guys who've been following these trades for the last year, I mean, look at these nice gains, you should have no problem considering the membership on this. Again, pretty excited to get this launched. And remember, these KISS systems are only going to improve more over time. I have more ideas that I can add to this amazing universal system. Anyway, let's get back to the general market. So image number 5 shows the index sector table, what transpired today and this week. You can see major indexes all down nicely except for the Russell. Okay? Otherwise, everything's been down nicely. S&P down 0.6%, NASDAQ down 1%, 1.1%. The Dow down 0.9%. For the week, Dow's down 2.5%. Remember, the Dow's been leading to the downside, while the S&P is down 1.3% for the week. NASDAQ's down about 1.4% for the week. And the Russell is down for the week, even though it was up today. Now, despite the down market today, most sectors were actually up. A lot of these have concentrations in the small caps. But clearly today the weakness was in technology, semiconductor, and communication services, which contain a lot of those FANG type stocks. This action here, where you have 21 sectors, where 18 of them are up and only 3 are down, that is the result of that concentrated market where you have Nvidia and Apple and just things like that are holding up the market. They're so skewed. The market is so skewed to those. And you can really clearly see that here with today's move in the sectors. Most of them are up, but yet most of the major indexes were down strongly. Currency-wise, US dollar down 0.3% today, flat for the week essentially. Bitcoin up slightly. The daily chart's on a coil pattern, which I'll show you when I get to that section. As far as commodities, pretty much bloody red here. All the commodities were down, every single one, from the index to crude oil, natural gas, copper, uranium, agriculture, you name it. And precious metals, gold was slightly up. It's up nicely for the week, while silver took a big hit, down 2.6% today. GDX, the miner, was up 0.9%, up 0.75% for the week. And as far as the bond market, yesterday we had a nice rally in the 10-year, 30-year Treasury yields. Today they pulled back. That didn't help the market though. Next, item number 6 shows the economic news calendar. Tomorrow on Friday, remember, we have PCE and PCE Core and Chicago PMI. So those are big ones that could potentially move the market in the morning. Today we had GDP, and unsurprisingly, they lowered previous GDP estimates, and that's the whole rub with this thing. Whatever GDP comes out, you always know that it's going to be revised down later on. They're always playing with the numbers. Okay, let's go and jump to these index charts. First image below, item number 7, is the daily snapshot of the 5 key major indexes. So again, we've had a nice pullback here, well, especially in the Dow. The Dow has really pulled back over the last week and a half, all the way up near those upper Bollinger Bands, all the way down to the lower Bollinger Bands. Remember whenever the Dow hit that 40,000 and it was all over CNBC and Drudge Report? That's always a death knell in the short term. And since that time, we've pulled back quite strongly to about 38,000. Little pullback here in the S&P, like I said, down about 120 points off the highs. And a little pullback in the NASDAQ, not as much yet. And the Russell, kind of in the middle here. See the Bollinger Bands are pinching. Next. Let's look at some of these weekly charts. So in my newsletter last week on Thursday, I talked about these weekly charts. I pointed out the weekly RSI divergence, but what I really was pointing out was the MACD KISS and the stochastic oversold setup that offered a short setup. It's where you have the MACD pinching on the underside. It's not crossing its signal line. And you have, at the same time, a stochastic that gets overbought. Again, I call that a MACD KISS stochastic overbought short setup. Your trigger is taking out the low of the previous candle. And this triggered last week here. Stop at the initial high. And lo and behold, this trade's played out nicely. Okay. Next big support's down here around 37,000. But that's an example of that trade that played out. Next, chart number 9. So here's SDOW. That's the triple inverse ETF for the Dow. Again, since you can't easily just trade the Dow, this was a way to play a short on the Dow from the previous week. And you can see here how this is triggered nicely. Again, you had your MACD KISS and you had your stochastic, instead of overbought, your stochastic oversold. So you triggered off the high of that doji from a couple weeks ago, right? That's your trigger. 1 penny above that doji with an immediate stop at the low once it triggers. So this triggered last week, and nice follow through this week already. So you had your corresponding RSI divergences as well. Again, very easy type of setup. It's a mechanical-like setup, which I like. Next, chart number 10, here's SDOW on the daily, just showing you basically came down and had almost a double bottom here. It's had a nice move up on pretty good volume. This honestly doesn't look done to me. Maybe it pauses here, flags a little bit, but wouldn't be surprised if it's still pushed higher. Next. Moving on, chart number 11, here's a weekly chart of the S&P, which again is down 1.3% this week so far. But remember last Thursday, I was showing this potential MACD kiss, stochastic overbought short setup. I said a trigger would have been taken out the low of last week's doji, which again, this week has triggered, which if you're following this, your stop would immediately be at the high there. Okay. Next. Some ways to play it. SDS, that's the double inverse ETF. You can see again, you had your same setup. It was opposite. MACD kiss, stochastic oversold setup. Again, triggered over last week's doji. So if you took this trigger, you would be long SDS with a stop right at that low. First target area would be this supply zone right into here. And finally, job number 13, here's SPXU. That's the triple inverse ETF. You had the same thing set up as well. Okay. Next. Job number 14, looking at the KISS system. So here's the S&P KISS system. Again, it's done a very good job. This, you can see how it went long in 2023 in March, held it all spring into early August, got out, had a little whipsaw trade there in early September. Then it got in just a couple of candles off the low in late October, caught that whole nice uptrend, got out in early April, then got right back long in early May, and it's still long. Now, you can see how prices pulled back here. You had a 9-13 to mark combo, and prices pulled back, still holding this ATR. The KISS system here is still long, for those of you following that. Current stop is around 51.70 on the S&P. And one thing to watch here is notice the moving average ribbon. It had its initial expansion on a bullish configuration, and now it's starting to pinch. Usually these first pinches, squeeze, are good buying opportunities. But again, that doesn't mean it can't go lower first. This definitely has room to squeeze more. And again, we're still above that smart trailing stop there. So let's see if price doesn't pull back too much where it hits that smart trailing stop or not. We'll see, but for now it's still holding. Next, chart number 15, here's the 4 time frames we like to follow on the KISS systems. So here's the daily up here. Again, you had a 9-13 to mark combo. You also had a resistance cycle, which I was pointing out last week, and lo and behold, price pulled right back from it. Now, it's still holding the ATR for now. Apologize, I needed this chart hadn't updated yet, so here's the updated view. Again, you can see on the daily, nice pullback from the 13 to mark, resistance cycle. We're approaching the ATR. We're still holding that for now. We lost the ATR in all the lower time frames. Okay, we lost it on the half day today. Now there's a little support cycle dot you can see there. We'll see if price can try to bounce or not. All right. Next. Moving on to the S&P chart. Chart number 6. Here's the chart just to keep an eye on. This is the SPY up here, and this is the equal-weighted RSP. And again, you can see you had a big old divergence at the highs here, where the equal-weighted made a lower high, and the S&P made a higher high. And now that divergence is playing out. And again, this is the long-term problem with the market. It's so concentrated now with some of these big cap tech names. Next. Chart number 17, here's the daily view of the S&P. Steve talked about this resistance zone up here, which we stalled at, and the first demand zone is right into here, and we're now into this portion of the demand zone. So we'll see if this can hold or not. If not, the next support would be that 50-day moving average. Next. Chart number 18, here's another daily chart of the S&P. Again, this is kind of how we're viewing it, this wave 1, 2, 3. We're viewing this for now as a wave 4. Okay, some sort of wave 4. Again, it could end here. It could go a little bit lower still, maybe the 50-day moving average. But for now, we're viewing this as a wave 4. And you can see the moving average ribbon, how it's starting to pinch there. So keep an eye on that. Next. Number 19, here's a half-day chart Steve's been showing. So your resistance zone up here where we pulled back from. We're now into this first supplies or demand zone near the 38% fib. So we'll see how price action acts tomorrow, but this is the first support area. Next. Chart 20, here's a 2-hour view. So we broke this channel, so be aware of that. And 38% fib is down here at 51.93. Next, chart 21, here's a 60-minute chart. So we stopped at that supply zone early this week, and we're now into the first demand zone here. You can see we got into it, bounced off those lows. Price is down a little bit here after hours. ES futures are down about 8 points. But so we're right into this demand zone. We'll see if this can hold or not. Again, we do have some potential open gaps further down here. If price sells off and accelerates to the downside, these could be magnets. But for now, we're in this first demand zone. Next. Chart 22, here's a 60-minute chart. So this shows you that wave count I was showing you the previous week. This potential nested 1, 2, 1, 2, 3, 4. So we completed that initial smaller count, 1, 2, 3, 4, 5, in the previous week. Okay, but right now that appears to be some sort of wave 5 of 3, and this is a wave 4, as I've discussed in my opening comments. So you can see we got first into this demand zone. Let's see if this can hold or not. And again, for now, we're viewing this as some sort of wave 4, which again could get deeper first, but for now, viewing it as a wave 4. Chart 23, here's a 30-minute view. So a couple of these open gaps. So we filled those 2 open gaps. We're into this demand zone here. Again, if things really wanted to unwind, there is an open gap here on May 6th. A small one. There's a bigger one back here on May 3rd. Next. Moving on, chart 24, here's the triple Qs KISS daily system. Again, just like in the S&P, it's been pulling back. It's still above its smart trailing stop, which is currently at 446.30. Again, the trade is profitable. Remember that the system went long on October 31st, rode that whole uptrend, got out in early April, mid-April, got right back in early May. And again, the current stop is above that entry. That's the beauty of the KISS system. It gives you, it alerts you when to enter. It's mechanical. It sets its stop so you know your risk, and it moves that stop up over time like insurance. So your drawdowns are always really low with the KISS systems. You know, average of 3 to 5%, 6% maybe, versus buy and hold where your drawdowns are typically 20 to 30% on average per year. That's the amazing thing about the KISS systems. You never have to worry about going through a bear market again. And again, guys, one will come again eventually. They always do, okay? Next, chart 25, here's the 4 time frames. Again, still above the ATR in the daily, just like in the S&P. Still holding the ATR in the half day, unlike the S&P, but right on it. We've lost it on the other smaller time frames. Chart 26, here's the daily chart of the triple Qs. Again, just like in the S&P, I have this labeled as a wave 1, 2, 3. Recent high is a 3. And this is some sort of wave 4, which again could get deeper. First support here would be the 20-day moving average, which we haven't made it back to yet. You can see the recent high there has had some RSI divergence. Chart 27, here's a weekly chart that I posted last Thursday. This weekly rising wedge. Now, this is something to be aware of over time. You can see the MACD, bearish MACD KISS, stochastic overbought short setup there, which is starting to trigger. But longer term, you have a potential 5-wave rising wedge on a weekly chart. Again, I don't think things just completely unwind right now. We have the election cycle, but this is something that could, again, it could flesh out here. This is a weekly chart, guys. I mean, just look at this wedge. It could flesh out, chop around in this wedge most of the summer and then play out in the fall, perhaps. But it is something to monitor. And I think it will eventually play out with a pretty good correction once this completes. Chart 28, here's the NASDAQ half-day chart. And you can see we stalled at that resistance zone last week. We're now into the first demand zone here. If we lose this, there's a little tiny open gap right here, and there's a big one down here. Chart 29, here's the daily another half day triple Qs chart. You can see that little steep rising wedge, which we broke the previous week. Pulling back nicely so far. Moving average ribbons are starting to pinch, but they could definitely pinch more. Definitely plenty of room there. They are bullishly stacked. Chart 30, here's a 60-minute chart. It's a pulling back off that resistance area, filled that gap, and you can see the next little gap below down there. Should we go to that area? Chart 31, here's a 2-hour view with some fibs. So far, we're closed right around that 23.6 fib. Next, chart 32, here's IWM Russell 2000. Again, pulled back off that resistance zone a couple weeks ago. There's a big demand zone down here, which it hasn't gotten into yet. It's kind of chopping around into this area. And chart 33, here's a 2-hour view. Previous week, we stalled out with that MACD divergence, remember? It's pullback. There is a big open gap here, and these gaps like to be filled. So on further downside, that would be my minimum target right there. All right, guys. That does it on the major indexes. Let's move on and look at some of these custom indicators. So here's a chart that I showed 2 weeks ago. It's the VIX with the VVIX-VIX ratio. So as you know, we generally show the VIX and the VVIX with the Bollinger Bands. We get really nice trade signals when the VIX is outside its upper Bollinger Bands or lower Bollinger Bands and closes back inside. All right, that is not occurring on the VIX or VVIX at this time, but the ratio is interesting because you also get the same thing. I've noticed whenever it gets outside its Bollinger Bands, whether it's the upper Bollinger Bands or lower Bollinger Bands, tends to be near market inflection points, like I state here in the comments. And you can see about a week and a half ago, the VVIX-VIX ratio was outside its upper Bollinger Bands. That was given an early warning that the market was near some sort of pullback correction. And that's what's been playing out. Next. Chart 35, here's the VIX itself. Again, you can see briefly it was above the upper Bollinger Bands, pulled back off of it, formed a black candle. And also, guys, remember 2 weeks ago, I talked about how the VIX had an RSI 5 divergence. And I also talked about this lower Bollinger Bands. You can see in my comments, not possible to close below the lower Bollinger Bands because they're sloping so strongly down. You need a bounce in the VIX to cause the lower Bollinger Bands to turn back up. Well, lo and behold, along with that RSI divergence, we're getting that nice bounce in the VIX, and this is eventually going to cause those lower Bollinger Bands to start curling up. So again, that's just one thing I've noticed over time when it's doing this and prices just cannot get to it. You're close to some sort of bounce in the VIX. Okay. Next. Chart 36, here's another chart of the VIX, just a clean daily chart. You had a little wedge pattern, which is bounced out of. This is now the first supply resistance zone, which we're tagging the underside of. Next, chart 37, here's the VIX 2-hour chart. There's been this open gap, and lo and behold, that was actually filled today right there. So the gaps on the VIX especially are always magnets that are almost always filled, and this was filled. Maybe that gives chance for the market to have some sort of bounce here on Friday. We'll see how it reacts to those PCE and inflation data. Next. Chart 38, let's go ahead and move on. This is the NAMO and NIMO. You can see they've been below the lower Bollinger Bands a couple times. This hasn't updated yet. It updates really late, so I'm not sure where it's going to close here tonight. It doesn't update on stock charts till several hours after the cash market closes. Chart 39, here's the SVXY with the S&P. SVXY is the inverse VIX. They move together. And generally, the SVXY tends to lead, as I've stated, and it was leading to the downside here. Next, chart 40, here's the high-yield corporate bonds. They bounced today. You can see finding support at the 50-day moving average. If you want a slight positive on the market, since the market tends to follow high-yield corporate, This was stronger today than the S&P, which was down nicely, so a little divergence there. Next, chart number 41, here's the 10-year Treasury yield. As you know, it's still up in this kind of upward sloping channel. Big rally the last few days, but it did pull back nicely today, which did not help the market. Chart number 42, here's TLT 20-year bonds in the same pattern, same channel, but obviously inverse. Remember, bonds move inverse to rates. Well, the hope here is this can form a higher low inside the channel. We'll see. Next. Moving on to the market sectors here. Let's just cover a few individual ones. Here's XLK Technology. Again, nice pullback. Remember, this is heavily tech, and really just a couple names dominate this. You can see nice pullback right to its 20-day moving average. Chart number 45, XLC Communications sector. That contains a lot of those big stocks like Amazon and Google. Anyway, you can see this is still basically near the highs. Again, market is these large cap tech stocks have such weighting on the index. It really skews them. Chart number 46, here's the semiconductors. Little pullback here. Still above the 9 EMA though. Still very strong. Chart number 47, SOXS. That's the triple inverse ETF for the semiconductors. Steve put this out yesterday as a little short on the semis, and that is played out a little bit here. Chart number 48, here's IYT Transports. A couple weeks ago, I talked about the transports looking pretty awful. I pointed out this bearish moving average ribbon squeeze on the underside, and I also talked about this head and shoulder look. And you can see it's been playing out a little bit. It's been below its 200-day moving average. Yes, it's bounced back a little bit, but this has really underperformed the indexes this year. It's been downtrending since March. Chart number 49, here's XLI Industrials. Essentially had that double top, and since then a nice pullback. Chart number 50, here's XLE Energy, still in the confines of this channel. There's a little tiny demand zone here where it's trying to bounce. Otherwise, you got this open gap below, which could be a magnet over time. Chart number 51, here's Oil Services. Again, you got the demand zone here, which we've been trying to hold. Zooming out on a weekly chart, here's a weekly view of the oil services. Again, you can see this kind of choppy uptrend since 2020. This area is a big thin zone here that you see in green. You can see the price by volume, how small those bars are. So you can see price has been, the last couple of years, have tagged that area and pulled back off of it. But if price eventually goes up here and gets into the thin zone, I think it has a quick melt up to this 420 area. So that's something to watch over time. I think that's an easy trade if it gets up into that area over time. Finally, chart number 53, here's yen. That's the Chinese ETF, triple leveraged. This was a beautiful long we put out back in April, which played out nicely. It got into that supply zone, logically pulled right off of it. Now, there's a demand zone where it's trying to bounce off of. To me, this was a little low risk area to take a shot long. And if it fails this, right down here around the 50, 200-day moving average would be a good area as well. Next, moving on to commodities, chart number 54, DBC, pulling right off that weekly coil. It's down about 0.5% this week. Again, still in this multi-year coil pattern. Chart number 55, here's the daily DBC. You can see a tiny coil here on the daily, closing right at those moving averages in the bottom of the coil. Chart number 56, DBC on the monthly. For the month, it's up 0.25%. You can see that coil a little more clearly here. Moving averages, ribbons pinching on the long term. I think this is eventually going to break to the upside, guys. That's not going to help Biden's and Powell's inflation fight. Chart number 57, crude oil. After a bounce a couple days ago on Tuesday, it's pulled back. It's now retesting this little broken downtrend line. Here's the tradable ETF, USO. Chart number 59, UNG natural gas ETF. Again, we put that out as a long back in April out of this wedge pattern, which played out beautifully. But again, it rallied perfectly to that 200-day moving average where it was rejected. If you were long, that was the place to take profits. The RSI's got overbought with some divergence. And since then, nice pullback. Again, hope you guys took some profits up there. Trevor 60, copper, down 2% for the week. It's down a couple weeks so far. It was quite extended. Had a hell of a rally out of that coil. Not surprised to see it pull back. Here's the daily chart. Again, you had this kind of parabolic look. It was getting extended, wide moving average ribbon. So it's been pulling back. Now there's a little demand zone down here. Let's see if it can bounce in this area or around the 50-day moving average. Trevor 62, DBA agriculture. Remember, came into that demand zone, held it, had a heck of a rally. Black candle yesterday, little warning, so a little pullback here, but a really nice move off that demand zone from a couple weeks ago. Moving on to crypto, here's Bitcoin. So Bitcoin up about 1% today. Right now, it's coiling, as you can see here. So that's something to monitor. You can see the inverse head and shoulder pattern back here that we pointed out. Trevor 64, Ethereum ETF. We had this as a long idea back here in early May out of this coil. Hell of a move. Hope some of you caught it. Quite extended there. I took mine off today. Had a heck of a move. Trevor 65, CLSK, another crypto type stock. This one is coiling, one to watch. And in fact, it could be a short if it loses that lower trend line. But right now, it's forming kind of a coil-like pattern. Trevor 66, US dollar, down about 0.3% today. No changes, though. It continues to hold that uptrend line for now. Trevor 67, gold. So gold here, still kind of just chopping around, up today slightly. Really, the key support right now is this 50-day moving average. Okay. Again, it did have a nice pullback from that recent divergent high. Trevor 68, here's silver. Again, silver, remember, had a beautiful breakout this year, broke out of ascending triangle, back tested it, just absolute textbook, nice rally. Today it was down 2.6%. But again, it's had a hell of a move, guys. Maybe it needs to consolidate a bit. Now, the thing about the precious metals, guys, and gold especially, you know, there is crazy demand that we did not have before in places like China, right? China, you know, they're no longer really invested in real estate anymore, and they're putting their money in gold. So there's a lot of demand on gold now that may have gold somewhat lose its correlation to the US dollar, where gold could be up regardless if the US dollar is up. So just something to think about long term. Basically, the intrinsic value of gold is now much different. I think it's going to go much higher over time. But right now, we're just consolidating. Trevor 69, GDX. Again, little bounce today, right off that 20-day moving average. So far, we got a lower high there. Trevor 70, GDX on the 60-minute chart. Steve showed this last night. You have kind of a little head and shoulder look here, but again, you need to lose that neckline, okay, which we haven't. This pattern could clearly be negated on a good push higher. Here's dust. That's the inverse ETF. You have also kind of this inverse head and shoulder look, but again, it needs to, you know, rally up here to confirm that. Next, Trevor 72. Here's the BPGDM Gold Miners Bullish Percent Index. This is back up here almost at 90%. But one thing to note here, guys, you're setting up a really big MACD divergence here. Again, the low risk buy on the precious metal stocks were when this puppy was buried there in late February. When it first curled up, gave you a buy signal late February, early March. All right. Up here is not low risk, okay? Especially with this MACD divergence setting up. Looking at some individuals, here's GDXJ. That's the Gold Miner Junior ETF. Remember, this so far it's pulled back a little bit off that weekly supply zone. Trevor 74, pause. It's Pan American Silver. It's this big silver stock. Nice rally out of that wedge into this supply zone so far. Again, logical place for it to maybe stall out. Eventually, though, I think it makes it to the next supply zone. Trevor 75, KGC. Again, a lot of these are still holding up okay. We had this as a long setup back here in March, and of course, April, May, heck of a move. It's still holding the 90 MA. You can see how it's been outperforming relative to gold. Little RSI divergence setting up here, so be aware of that. Finally, guys, moving to the last part of the newsletter. Here's NVIDIA finally pulling back today. Again, NVIDIA is the dominant thing in the market now. Not too far away from Apple on market cap, and everything's AI. But pulling back here, we'll see if this wants to pull back more, maybe fill the gap here. There is no MACD divergence here or anything, so likely this forms some sort of flag, not a major top. For fun, looking at some of these other names, here's Salesforce. Hell of a sell-off on earnings. This is the weekly chart, 20% here. Now, if you believe in the company or whatever, there is a demand zone right here. Also, you have the 61.8 fib here, which could be that would be an objective area to attempt along into this demand zone. Chart 78, American Airlines. This is a weekly chart. Man, this stock has been absolutely destroyed. Back in 2018, it was almost 58 bucks. It's now down below 12. And this chart still looks extremely ugly. Look at this chart. God. Following up on some previous setups, here's TMDX, long idea mine in early May. Hell of a move. It does look a little extended, tired. You have some MACD divergence here. And in fact, to close below its 90 MA, I'd probably be out of that. At minimum, I'd put a stop below today's lows. It's had a hell of a move here. Make sure to lock in those gains. Chart 80, Irene. Remember, this is a long idea from one of our subscribers from a few weeks back. And that coil really played out very well. Hope some of you guys caught it. Still holding the 90 MA. Chart 81, CNQ. This one's coiling, one to watch. This could go either way. Long or short, trade the direction of the break. Chart 82, DRIP. That's the inverse ETF for oil and gas stocks. This kind of has a bullish look to it, little ascending triangle pattern. That's a way to play a pullback in that sector. Chart 83, DoorDash. Looks weak here. We got a little shelf support. A break of this easily tagged the 200-day moving average. Chart 84, CAL, short idea from Steve the other day. It bounced off the lows today, but still looks quite weak here. Maybe the 200-day moving average would be a target. Here's one I haven't showed for a while, FUTU. This is one I put out back in April, this weekly chart. I liked the weekly coil that it was breaking out of. Just go be an update, guys. This is my target over time up into here. I still own a little position of this that I'm trying to hold for an eventual move up to here. Chart 86, SLI, Standard Lithium. I'm still watching this one, still holding this, filled that gap. It's still holding the 20-day moving average here. I'm still watching to see if this can get some volume into it. Chart 87, here's a new one, CXW, nice coil pattern. And chart 88, CNA, financial. Nice volume pop today. You got a clean resistance right here around 45.50. Again, guys, we'll see what the market does here tomorrow. Futures are down, like I said, about 8 points or so on the ES. We have the PCE and inflation data, CPI tomorrow, so we'll see how the market reacts to that. Again, looking forward to the KISS systems. Once we're ready, I'm going to do a separate dedicated video to that. And again, have a wonderful evening, guys. I'm going to take off and go see my daughter play. Take care.